Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. And here's your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. So, the key August 2011 high at 25,195, which I have been going on about for a long time, is no longer in the picture. Nor is the long moving average overhead, currently at 24,415. Instead, we now have overhead at the February 2014 high at 22,155 and the important May 2014 high at 21,610. Plus also the ever-present mid-April to late May bearish Andrews pitchfork, specifically the declining middle time below, currently 20,515, and the upper time above, currently 23,195. This bearish Andrews pitchfork seems to be the driving force in this market at this time, and nothing is challenging it for dominance at this time. Below we have some congestion from September, October and November 2021 highs at 2705, 21425 and 21240 respectively, and even the start of the 2022 high at 21165. But in comparison to the journey the market has seen since February this year, their support fades into some insignificance. Right now it is the 3 times of the bearish Andrews pitchfork, the upper, the middle, and I have already mentioned. And then there's also the lower time below, currently 17,840. Between where we are now and the lower time, we do have 2 other areas that might just prove to be interesting. They are the August 2019 high at 18,850 and the October 2019 high at 17,815. Now these 2 might be worth watching, along with the May 2014 high, which the market is currently challenging at 21,610. LME 3-month zinc. There continues to be a lot of interesting things going on here right now. First off, the context. I'd previously spoken about how I had on occasion taken a step back and looked at the monthly charts to get a better picture. From these I noted a significant pattern still in operation, plus a second pattern that was formed and is also now in operation. The principal pattern was the 2015 to 2020 bullish Andrews pitchfork. The most recent events involving this pitchfork was at the end of May and the start of June, when the market approached the middle time from below, and that's currently at 39.93 or 39.93 if you like, and it was rejected. And again, most recently, as the market now has the lower time, currently 26.65, just peaking from below the bottom of my daily chart. Now, if we go back and look a little more closely at certain elements in mid-May and then especially mid to late June, we can see for the former how the market came down and kissed the lower trend line, currently 35.73 of the second large pattern was then being formed on the longer term charts. This lower trend line was from a very large ascending expanding wedge pattern. In mid to late June, the market kissed this trend line again and then broke it, and we are still seeing the implications of that break today. Hence, a primary target X1 is way lower below the bottom of my daily chart right now in the 2082 area. It would be fair to treat this at the very least as a longer term target. Upon reflection, I'm not happy just as yet to place a secondary harder to get target, not just yet. However, there are a few more patterns that I'd like to discuss, one of which I introduced a few weeks ago. It is the prospective March to April bearish shift pitchfork. I say prospective as this pitchfork has not had either the upper or lower time tested as yet, and until it does, it will remain prospective. The one time that has seen attention, especially since May, has been the middle time, currently at 32.74. Additionally, we also have a more recent bearish shift pitchfork for the mid-April to late May action. The market is currently either side of the middle time of this one. This brings me to the last pattern I'd like to discuss, the mid-April to date bearish half hesitation. Now this pattern has a target X in the 29.15 area, which is not that far away in relative terms. On the way down there, the market has overcome a pair of old congestions. The first one was an old bearish bump and run reversal trend line from August to October last year, currently at 35.72. Second one was the 50% Fibonacci line of March 2020 to March 22 move at 33.29. These are now resistances. As for supports, well, the market has last week been tackling the April 2019 high at 29.58 with limited success so far. Below this, there is another congestion made up from the August 21 low at 29.16 and the July 21 low at 29.05. Now these two straddle target X. Below this, there is just the June 21 low at 28.10 before we reach the lower time. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.